ESOPs foster a sense of commitment and alignment with the organization objective. When somebody is feeling that I am part of the ownership, then the commitment can match with the organization objective. The synchronization of ESOP and annual appraisal at the right time is crucial, ensuring a maximum impact on employee engagement, because this is the time when employee expect, and this is the right time to discuss and bring out the new instrument. The strategic alignment enhance the overall effectiveness of these initiatives, fostering a sense of ownership and motivation amongst employees. Now, today's program, we have divided into various areas which we want to discuss today. There are 7, we have divided the entire program into 7 parts. We will discuss overview about the ESOP, what is ESOP and what type of instrument are we offering. Purpose and process of showing our ESOP. ESOP practice prevalent in different industries, because when you want to see that if I am coming out with the ESOP, what will be the impact? So the impact you can judge as compared to other industry. Right time for the organization to align with the appraisal process with ESOP grant. Impact or alignment on employee engagement, promoting a culture of performance and reward in the organization. And then alignment in performance evaluation for providing a long-term incentive, and simultaneously discussing about the various procedural aspects, including valuation, taxation, and the legal aspects. Firstly, I extend a very hearty welcome to our learned speaker for today's webinar. First, Mr. Ankit Jain, who will join shortly. He's a Senior Director, Reward and Talent. Now, very interestingly, you can understand we have invited people, those who are connected to this particular aspects. So he is having a designation of rewards and talent. So in the HR division also, there is a separate team, separate people, those who are ESOP oriented and they have a knowledge of this rewards and talent. So they always comes out new idea. In delivery limited, he is working as a senior director. He has more than 12 years experience in HR professional. His key area of expertise is HR strategy and transformation, total rewards, post-merger integration, organizational design and development, talent management, and change management. So you can understand what today's program, Ankur is one of the perfect person who can tell us about this concept, how this concept is useful, and how the industry is taking advantage. Then we have Ms. Ritu Saxena. She's a Senior Vice President, Total Rewards and Talent Acquisition, SBI Card. Again, you can understand the definition and designation are changing. So people are not saying they are the HR, but they are the part of the HR. In the HR, Reward and Talent Acquisition is a separate designation they are providing. She has more than 17 years experience, and before SBI, she was working in Max Life Insurance Company Limited. I welcome Ritu and Ankur, both. They are just joining. Then we have Ms. Mohini Vaishnav, partner and head ESOP and Insider Law Service, corporate professional. Mohini is a part of the various committees, and she has helped me when I was in the committee of the ESOP, and we came out with the new model of the ESOP by SEBI. So Mohini has worked, and she is the part of the various SEBI's committee of insider trading. Insider trading and this ESOP sometimes goes hand to hand. Then we have Sanchit Vijay. He's a partner and head evaluation and deal transactions. And he's a chartered accountant, and he will discuss about the valuation part. Then we have Ms. Anshuma Day. She's assistant manager ESOP, and she is working in ESOP division. So the Mohini and Anshuma and Sanchit, they are working out day and night related to various ESOP schemes, various ESOP planning, continuous research, valuation part, new instrument they are doing. So they have experience, and Mohini has done work in more than 500 companies, their ESOP ideas, ESOP planning, and other things. So I welcome all our speakers, and I just want to cover certain parts of this. As friend, you are aware that what is happening in the market now. So welcome, Ankur. Welcome for this program. And I was just introducing you. So you can understand that what is happening today. The very interesting part, which is going on now today, ESOP is not connected one instrument. The ESOP is using people for reducing cost of the company. And the most important thing is they are rewarding the performance through ESOP. So earlier, only monetary and designation wise, the esteem was only two instrument. Now people have started through ESOP, and ESOP is a things which is promoting a culture of performance and reward in the organization. So you are creating a atmosphere in the organization, a culture of the organization, culture of belongingness, culture of ownership. That is another aspect which is happening. Then employee engagement. Employees also engage and they do the best from their own availability. And I think that Ankur and Mohini and Ritu will tell us. Then ESOPs serve a best tool for providing long-term incentive. So one is short-term, you give incentive within 1 month, 2 months, everything is adjusted. But this is a continuous thing because when the company is growing, your growth is also taking place because your instrument value is going up. So continuously, it is giving a long-term incentive. Deferred revenue, this is another aspect that you are giving your employee instrument where you will not pay immediately. So you are deferring your payment. That is another aspect. So the cost to the company is also reduced. The cost of the employee cost is reduced, but employee is getting that money. Employee is sure that I will get, this is my benefit which I'll do. Motivation is also very important, which is one important part, and retention, which I have told you. Today, what is happening when companies are coming to us and they're asking for the scheme drafting and things, their first thing is not other part, they want retention. Because retention is this ESOP is a tool where people continuously retain because their need is first retention, then motivation, and then other thing. So they are going in this manner. Today, what is happening? The companies which are in MSME, they are also thinking that how we can reward this, how we can use this. So not only the listed company, actually ESOP started from startup, and then it has gone to the listed company, then some PSU, then other area also. But now MSME is also thinking how to do it. So the lots of instrument has come where the MSME is unlisted and they want to reward. So buyback system is there. You can buy back shares. You can give the ESOP to the employee, and then you can do buyback after some time. So the listing purpose, where the employee can sell shares in the market in place, they can give back to the promoter and the owner. The most important thing, which is a trend today, there is one concept which is very popular now, ESG. So ESG concept is there where the funds are putting if the company is ESG compliant, and then good governed company, which is a one indication that how you are taking care of an employee. So employee benefit is one of the biggest aspects when companies ESG compliant or not that they are seeing. So when they see that this company is taking care of their employee and they feel that the company is the management and everybody is taking in a different positive aspects. So people think that this company can do better in future because their employees are motivated, employee are long-term employee, and they are also partner in the growth of the company. So it means they will give the best. So friends, today we all will discuss these aspects. We have called two industry person, those who have seen this development and those who have seen how the things is moving. So Ritu and Ankur will share their experience, their market trend, and they will tell us that what we are saying, is it effectively happening in the companies and happening in this. So first I will request, the program structure is like this. First, Anshuma will discuss and give the overview of ESOP. So everybody, because some of the people, those who have joined, they are not aware of everything. So just we want to give in a very short way the overview of ESOP, type of instrument, objective of ESOP, life cycle of ESOP, and law relating to process of insurance of ESOP in very short. And then Sanchit will cover the valuation aspect of ESOP, and then Mohini will discuss about the type of instrument, how this is happening. And then Ankur and Ritu will share the industry experience. And then we have done some poll in the market about the instrument, about the process, about other things. Then we, Mohini and Anshuma again will discuss, and then we'll take up question answer. So over to you, Anshuma, and start your presentation.
Thank you, Pawan sir, for a brief introduction. I welcome you all in this webinar. I'll just present my screen first. Hope my screen is visible to you.
Yes.
Okay. So let's begin this webinar with understanding the overview of the employee stock benefit schemes. So employee stock benefit schemes are also known as the equity incentive plans. They are commonly referred to as ESOPs, and they give the employees an ownership interest by participating in the stock or shares of the company. So basically, under these employee stock benefit schemes, generally an option or a unit is given to an employee, which is basically a right, which is given to an employee to purchase a given number of shares of the company at a future date and a fixed predetermined price. So here, the price at which it is given to the employee, it is already predetermined. So generally, an option or a unit is representing the equity shares of the company. For example, if one option or a unit is issued, it means the employee is eligible for one equity shares of the company. Now, if we talk about the types of incentive instruments, so there are different type of incentive instruments running in the market as of now. And one of the most opted or one of the most famous incentive plan is the employee stock option plan. These days, the RSUs, that is the restricted stock unit, also are gaining popularity among the senior when the employee companies are granting ESOPs or RSUs at the senior management level. Then you have the employee stock purchase plan. Then we have SAR. So SAR is basically the stock appreciation rights, which on the basis of settlement is further divided or categorized into two. First is equity settled and second is cash settled. So when the appreciation is settled in equity, it is called as stock appreciation rights equity settled. And when the appreciation gets settled in cash, it is called as stock appreciation right cash settled, also known as the phantom stocks. Now we'll go through an overview of each of the incentive instruments one by one to understand how these are prevailing. So first incentive instrument is ESOP. So what is an employee stock option plan? Basically, employee stock option plan is a type of equity ownership plan wherein an option is issued to an employee. And as we have understood, that option basically is a right which is given to an employee to subscribe the shares of the company at a fixed price, which is already predetermined. And this benefit or the right, it's get converted over a fixed period of time and about fulfillment of certain conditions. ESOP, as it is one of the most adopted mode to incentivize, so it is considered as one of the most traditional mode wherein the employee get incentivized by the companies. ESOP plans are generally, they provide various kind of flexibility to the company when they decide the terms of the ESOP plan, such as exercise price or vesting period or exercise period at the time of grant. There are various companies recently who have introduced ESOPs in their companies, such as Rainbow Children's Hospital. Then you have Sona BLW. So these are the listed companies. And also in the unlisted companies, ESOP are also prevalent in the market, such as Lakshmi India Finance Private Limited has introduced ESOP, and Exicom Telesystems Limited has also introduced ESOPs. The other type of instrument is the RSU, that is the Restricted Stock Unit Plan. So restricted stock unit plan is also an equity ownership plan, and it is considered similar in terms of ESOP. But in RSU, certain instead of options and units are issued to the employee. So these units also give a right to the employee to subscribe the shares of the company over a fixed period of time, and they are linked with certain conditions which are imposed. So for the RSUs, based on the vesting, we can categorize RSUs in two forms. First is on the loyalty-based RSUs, and second is the performance-based RSUs. Loyalty-based RSUs can be understood like, for example, if the vesting of the employee or the RSUs are linked with the longevity in the company, how long period the employee is continuing, and performance-based RSUs where certain RSUs are linked with the performance conditions or individual or either of the company. So in generally RSUs outside India, if we talk about, they are generally issued at a zero price. But in India, it is read in the context with ESOP. Therefore, in India, RSUs are generally issued at the face value of the company. Few of the companies which have already implemented the RSU plans are Newgen Software, then you have Vaibhav Global, and the R Systems Limited, International Limited. The next incentive plan is the ESPS, that is the Employee Stock Purchase Plan. ESPS is also a type of equity ownership. Now, under ESPS, if we compare it with the ESOP, under the ESOP, an option is given to an employee, whereas under ESPS, shares are directly issued to the employee. Here, the employees directly receive the right to subscribe the shares of the company, but at a discounted price. So ESPS is considered to be a reward plan, which is used to appraise and incentivize the employees. But under ESPS, the shares are immediately allotted to the employees. But once they are allotted, they are subject to a lock-in of minimum 1 year from the date of allotment. The few of the companies which are running the ESPS plans are Havells India Limited. Then you have Jammu and Kashmir Bank. Then you have Punjab National Bank. The next is the SAR. So as we've understood previously, that the SAR on the basis of the settlement is categorized into two. First is the equity settled and then the cash settled. So first we will understand what is SAR. As the name suggests, stock appreciation right. It is that form of incentive wherein the compensation which is to be issued to the employee is linked with the performance of the company's shares. So under SAR also units are issued to an employee, but employee will receive a certain appreciation value which is to be calculated, and then the settlement of that appreciation value depends whether it is to be made in equity or it is to be made in cash. So appreciation value is basically what is linked with the performance of the company share. So appreciation is to be calculated as the difference of the fair market value of the share as on date of the exercise when the employee is actually exercising the units, and the grant price or the base price which is already fixed at the date of grant. Based on the settlement, the SAR can be categorized as equity settled and cash settled. So if, for example, if the appreciation value is settled in cash, then such appreciation amount will be credited directly in the bank account of the employee, and such scheme will be termed as the SAR cash settled. But however, SAR cash settled is not governed by the SBB regulations as of now. Or where the settlement is made in equity shares, that is for the appreciation value which the employee has earned, and equal to that a certain number of equity shares are issued to the employee, then such scheme becomes the SAR equity settled. There are various companies. For example, if we talk about the SAR equity settled, so there are listed companies which have such schemes are IndiaMart, RateGain, and InfoEdge. And these days we can also find the SAR cash settled schemes in the listed companies also. That is, there is Delivery and Cipla who have implemented such instruments. Now, on the basis of our CPE's internal data, we have made a small analysis considering that which incentive instrument is the most opted one. And in financial year 2023 onwards also, ESOP continues to be the most opted mode for incentivizing the employees in the listed companies. These days, we have also seen that SAR, that is the stock appreciation rights, the companies are also adopting the SAR instrument, wherein they are linking the performance of the employees or the incentive directly to the performance of the company. RSUs have also gained popularity because many of the listed companies are now opting for RSU schemes, and particularly they are being floated at the senior management level. And then you have ESPS. There are few scheme companies which have also implemented the ESPS plans. Now, what is the objective behind implementation of such equity incentive plans? So if we understand, there are various industries and they have several every industry serves different objectives. And considering the different needs and dynamics, each company or industry has a different objective to implement such instruments. But there are certain or common objectives across the different industries. First is the talent attraction and retention. The major objective of implementation of such plans is to attract the talent and retain them, employee engagement and motivation, achieve sustained growth along with the company, to create a shareholder's value for the employee, to provide the employee a sense of ownership and participation. Then you have additional deferred rewards, then cash saving along the tax benefits, and aligning the interest with the company's performance. These days, we are also seeing that the ESOPs are getting strengthened into BFSI sectors and also the insurance sectors. We'll understand brief about how ESOPs are being implemented in these two sectors. So BFSI sector, if I talk about, so RBI has introduced a separate guidelines on the compensation of wherein the banks have to formulate certain compensation policy by covering all of their employees. And these compensation policies basically cover various aspects of compensation structuring, which includes the fixed pay, perquisites, bonus, etc. As per these guidelines, it is required that this certain specified percentage of variable pay must be paid by the way of non-cash linked instrument. That is where the ESOPs or the share linked instruments come. And it is required by the RBI guidelines that such variable pay must be deferred for a minimum period of 3 years. So such compensation should be given as a form of deferred compensation. If we talk about the insurance sector, there is some similarity as per the RBI only. Our IRDA guidelines also have brought in a separate remuneration guidelines for the KMPs of the insurers. ESOPs has been made a part of the variable pay compensation also there. And there also they require at least a minimum percentage, 50% of the variable pay must be paid through share linked instruments. And they and under insurance sector also 50% of the total variable pay needs to be deferred for a minimum 3 years. Further, there is a limit which has been imposed in the insurance sector that the total ESOP, ESOP to be granted, the total ESOP which can be granted in a year should not exceed 1% of the paid up capital. And at any point of time, it should not exceed 5% of the paid up capital of the company. So this shows that how ESOPs are it's getting strengthened in different sectors. Now I will take you through the process how ESOPs is working at an organizational level. So, for example, if you understand, a company will frame an ESOP policy at the company level, and then they issue an option or a unit to the employee. So when the company issues such options or units, basically they grant to the employee, and the employee, from the employee perspective, if you see, the employee receives a right. A right is being received by the employee. So once the right is being received by the employee, the right is required to be earned by him. Then comes the second stage, that is called the vesting. Here, the grant or the option which was made to him is actually earned by him by fulfilling certain conditions. Once the right is earned, post vesting, at the third stage comes the exercise. Exercise basically means now his right is earned with him. Now he can exercise the right, that is, he's converting those options or the units into equity shares. And for such conversion, he is required to pay certain exercise price, that is the predetermined price, which was fixed by the company at the time of grant. Once he pays the amount, then comes the last stage, that is the allotment of the shares. Once the allotment is done, he receives the ownership right in his hand, and then the employee becomes the owners of the equity shares. Now, that is the right is received with him. So this will help us to understand how the life cycle of ESOPs works. That is, as we discussed, an ESOP policy will be framed stating all the terms and conditions by the company. Then comes the grant stage, which means it's a process by which the company is issuing options to an employee. Then vesting comes into picture. That is a right. It's a process by which he actually receives the benefit of the grant which was made to him. And next comes the exercise. Exercise means conversion of the options into the equity shares. That is, the employee is going to make an application for conversion of his options. And last comes the allotment, that the company is going to make the allotment of the equity shares and the employee becomes the owner of the shares. Now, after understanding the life cycle, we will go through the process of issuance of ESOPs. That is, if a company wants to implement an ESOP in his company, it's need to understand there are various law which are applicable on the companies. So if we talk about an unlisted company, the companies need to ensure compliances of the various of the Companies Act along with the rules. Then there is Income Tax Act 1961 also, which is applicable. If the company is making any ESOP or issuing any ESOP to any foreign employees, then FEMA comes into the picture. And the companies has to ensure the compliance of applicable accounting standards, the India's 102 or Guidance Note 18. Now, if we talk about the listed company, along with the Companies Act, along and read with rules, there is a separate regulation which talks about the ESOPs, that is the SEBI Share-Based Employee Benefits and Sweat Equity Regulations 2021. Companies have to adhere to this. Then you have SEBI LODR Disclosure Requirements Regulations 2015, SEBI Prohibition of Insider Trading Regulations, Income Tax Act. Again, if the listed companies are issuing any ESOPs to the foreign employees, then FEMA will come into the picture and applicable accounting standards needs to be complied. Now, very important aspect which needs to be kept in mind is ESOPs are basically issued to an employee, and who is an employee is already defined by the law. So if we talk about who all are covered under the definition of employee, that is the employee which are designated by the company, the directors of the company, the employees of subsidiary, holding, associate or group companies, and even the foreign employees are covered under the definition of employees. That means they're eligible for the ESOP under the company. But however, there are employees which are not covered or they are not at all eligible under the ESOPs. That are the employees who is a promoter or belonging to the promoter group, a director who is holding directly or indirectly more than 10% of the outstanding equity shares of the company, an independent director. These days, consultants like doctors, gig workers, contractual employees are also not yet covered. But however, there is not much clarity on their coverage. Therefore, this inclusion is also still under the discussion. Now, while issuance of ESOPs, there are few minimum requirements of law which needs to be kept in mind. The first is the route of the scheme. So the law allows the company to decide on the route of the scheme, whether the company wants to keep the direct route or the trust route. ESOP pool. So companies are required to reserve certain number of shares as a part of their paid-up capital. So the companies are also free to decide on such number of shares. First vesting, the law requires that there should be at least minimum gap of 1 year from the date of grant and date of first vesting. So this is to be very cautiously to be complied. Exercise price, that is the predetermined price. The companies are again free to decide the exercise price. However, the law says that the price shall not go below the face value of the company. So these are some requirements which needs to be adhered to. Now we will go through the process, at what stages or at what level if a company wants to implement the plan today, what are the approval stages which will come into the picture. If we talk about an unlisted company, so the levels are divided into two. First is the company level. The company has to get a board approval followed by the shareholders approval. The ESOP scheme will come into effect once it is approved by the shareholders only. If we talk about an authority level, the company have to comply with various ROCs and MCA filings. And if any issuance of ESOP is being done to the foreign employees, then RBI filings and approvals will also come into the picture. If we compare it with the listed companies, the authority level becomes a three-tier, that is company level, authority level, and third party. So at the company level, the company will require the approval of your NRC, that is the Nomination Remuneration Committee, followed by board approval and followed by the shareholders approval. At the authority level, if the companies are going to the direct route, you require the approval of exchanges, that is in principle approval is required. The requisite MCA filings are need to be done. Again, RBI filings will need to be done if issuance of ESOP is done to the foreign employees. Followed, and the third level comes is the third party, that is the merchant banker and secretarial auditors. Now I will request Sanchit to take forward the discussion on the ESOP valuation. Thank you.
Thank you, Anshuma, for such an insightful explanation of what ESOP and the kinds of ESOP that we undertake. So in the following phase of the presentation, we would be talking about what ESOP valuation is, when it is required, and how we do it, and what laws there are proclaiming for ESOP valuation. Firstly, for ESOP valuation is required at two stages during the ESOP journey. First, it is at the time of the grant, and the second at the time of the exercise of the options. At the time of grant, it is determined by a registered valuer, and at the time of exercise of option, it is determined by a SEBI registered merchant banker. This whole process for doing the valuation at the time of grant and exercising ensures that the fair value of the share is properly assessed at both of these stages. Next, please. Now, let's talk about two entities where ESOP valuation is required. Very clearly, for a listed entity, the ESOP valuation is only required at the time of grant. That is, we have to calculate the option value price for that respective ESOP at the time of grant. But for an unlisted entity, the valuation is required at two stages. That is, at the time of grant and also at the time of exercise. For listed entities, the valuation at the time of exercise is exempt. As I told you earlier, valuation for grant is done by a registered valuer, and valuation at the time of exercise is done by a SEBI registered merchant banker. Now we will focus on both of these aspects on how the valuation is required and what provisions we have to take into consideration. At the time of grant, the valuation is to be done as per the Ind AS. We have to follow the share-based payment Ind AS 102 that we need to take into consideration for reporting the value of the option that is required to be put into the financial statements of any company. At the time of exercise, Income Tax Act 1961 imposes taxation on ESOP as a perquisite during the exercise option. Just to reiterate one more time, at the time of exercise, it is required only for an unlisted entity and not for a listed entity. Next, please. To talk about the valuations of ESOP in case of a listed company, listed company would require the valuation for accounting purpose. That means they would have to book the cost of the respective ESOP at the time of grant in their financial statements. The price of the shares of the listed company we get to know the price quoted on the stock exchange. So the valuation for the purpose of taxation purpose is not required at the time of exercise. So only for the purpose of accounting, we require the valuation at the time of grant. Next. Now, in case of unlisted companies, we have to get the valuation at both the times. The income tax provides for the taxation of ESOP at the time as a perquisite at the time of exercise, which is to be done by a merchant banker on a specified date. The specified date should not be more than 180 days prior to the exercise date. That is what the rule actually mentions here. Next. Now we'll talk about the legal provisions regarding the ESOP valuations, what all things that we have to keep in mind while doing ESOP valuation. The first and the foremost is the valuation requirement under the Ind AS 102, which is the share-based payment, which specifies the financial reporting by an entity whenever we have to undertake a share-based payment transaction. A share-based payment transaction could be any form of option that we are giving to the employees. There are certain factors that we have to take into consideration while doing option valuation as per Ind AS 102. The different methodologies also given, but Black-Scholes is considered to be one of the most used in the industry while valuing any options. Things that we take into consideration while calculating the fair value of the options are the exercise price, the life of the option, the current price of the underlying shares, the expected volatility, dividend expected on those shares, etc. So all of these things are taken into consideration while valuing the shares as per the share-based payment at the time of grant, both for listed entity and for unlisted entity. Next. Now, coming on to the next aspect, which is the Income Tax Act, which imposes taxation on the ESOP as a perquisite. It is done to determine the taxable value determined by the fair market value of the shares, which is on the date of the allotment, reduced by the exercise price, which is being paid by the employee. And only unlisted companies are required to obtain this valuation certificate from a category 1 merchant banker registered with SEBI. And it should not be dated earlier than 180 days before the exercise date. Again, there are different methodologies that we take into consideration while valuing the fair market value of these unlisted companies' ESOPs. Next. There are certain amendments that were introduced via Budget 2020 for certain eligible startups. So primarily the first amendment was that no tax would be payable when employees exercise their ESOP option. That means the TDS on the perquisite of ESOP is deferred until these 3 events, any one of the following events that occurs, which is 5 years from the ESOP allotment date or date when the employee sells their ESOP shares or the employment termination. Whenever they sell it or any of this event occurs, they are subject to a tax similar to capital gain tax, which is with which the taxation is calculated, and the cost of ESOP is considered to be the fair value at the date of exercise. Next. Now, in all of these ESOP valuation, there are certain points to remember. For a listed company, the base price is the market price, which is 1 day before the date of grant for underlying price. That means that while doing the option valuation, the fair market value we take into consideration of the market price on the bourses of exchange. For an unlisted company, the price is calculated based on various valuation methodologies for grant, and we calculate the underlying price for unlisted companies. So that's a stark difference that while doing ESOP valuation for a listed company and unlisted company at the time of grant. One more thing that we get a lot of questions on the fact that companies are very much free to decide the exercise price, the discount or the premium over it. The exercise price should the only condition is that it should never be below the par value of shares. However, it will create certain negative factors while doing the valuations. So that is what we always recommend. And the minimum vesting period for the ESOP granted under a scheme should be minimum of 1 year, whether listed or unlisted companies. So these are certain pointers that we have to ensure while doing an ESOP valuation. So this is all about how ESOP valuation, when it is required, for which entity, what all things do we have to take into consideration. Now I'll pass on the mic to Ms. Mohini.
Mohini, now please, Anshuma and Sanchit has given this. Please give overview on appraisal vis-a-vis ESOP, because today's topic is this. Then right time to align with the appraisal process with ESOP, grant and impact of alignment on employee engagement, what is missing out if not aligned, and valuation, which Ankit has covered. If you want to add something, you can just add. Then after this, I will request Ankit to share his point of view. So Mohini, first, appraisal process.
Yeah, thank you, sir. Good evening, everyone. So, appraisal process vis-a-vis ESOP grant. That means today's topic. We all are now we are standing in the month of February, and new financial year, April is coming. In the April, along with the closing of the financials to review what we have achieved in the last year, another job in the with the management of any company is to appraise the performance of their employees, who are the important asset for a company, because without them the company can't think of growing or think of the next financial year. So appraising the performance of future past year, setting up a goal for the next year, and to set up the reward structure for the past, and how to motivate and how to reward for the future performances. So this time now the April is coming, and this is also an activity which every management in every organization they have to perform that. So now what we do in the annual appraisals. So in every company, in the annual appraisals, what we do, we enhance the CTC, we decide the rewards. And in the appraisal process, what we do is generally that what our aim is. Our aim is that to motivate the employees and informing them that the reward which they have earned based on their past performance. And also to tell them about that, yes, now what their increased new remuneration and what are the new goals and what are the new parameters which the company expects from them in the new financial year. So this is generally the appraisal process. In the appraisal process, the management do. Now, what the ESOP is? ESOP, as already Anshuma has very well covered that what the ESOP is. So if I link it to, so the ESOPs provide an opportunity, because in the appraisal, the company is giving them the goal. Yes, the company has a new goal to achieve in the coming financial year. So ESOPs also giving them a benefit and opportunity to an employee that they can participate in the company's success. So, and they can align their interest with the organization goal. So ESOP is a new compensation tool which which you can make a part in your entire new appraisal structure. So if I covered in the last slide, if I distribute and if I break it in the different steps. So let's understand on this particular through this particular graph. So when you are near to appraisal cycle, so what we are doing in the that particular financial year beginning, that we're setting a new parameters for the new financial year. So forward-looking vision for the employees. Employees are also looking for that what they have to do. They also have their plans, personal as well as organizational, their professional goals, what they want to achieve in the new financial years. So that is the time when there is a then the company and the employees' goal need to be integrated. So that means in the appraisal cycle only, the company communicated that yes, what the expectation of the company is from the employee, and the employee also communicate what they want to achieve in the company and what are their things they are planning in the coming financial year. So when it's a goal integration point is there, so what the company can do that they can communicate to an employee in that process itself that what they want to communicate, not only the future. Yes, definitely the past achievements are also important, which need to be informed to the employee. And what the resultant is. Resultant is that the company set an enhanced CTC by deciding between the cash and non-cash instruments, by including the ESOPs in their part, because ESOPs is a long-term incentive wherein the employee can also relate that yes, the company if reaches to a particular level, if definitely if we work together as a team, and company if reaches from X to 1.5x or 2x or whatever the X level, then then he can also relate that yes, my wealth and my thing also increase along with that particular thing. So what the company can do by aligning the ESOP is that yes, they can both things can run parallelly. So the company's goal and the employee goal both can run parallelly, and through this this is the right time we say that the companies can think of that by including the ESOPs in this year, their annual appraisal time. So if we link it, so what the impact of alignment on employee engagement comes if the company gives the ESOP as a part of a CTC. So first thing is enhanced employee motivation. Yes, reason being because now the employee also linking their goal with the company's goal. So their goals are aligned. So the motivation aspect definitely is high. And also they know that their performance will be evaluated with the company's performance thing also. So then their motivation, they know that yes, we will get over and above what is our fixed part. So this is the way through which the employee can be motivated. Employee engagement, definitely, because it fosters a sense of ownership and commitment among employees. So employee is now feel a part of the organization and is more engaged on their job profiles which being given to them. A performance driven culture can be developed in the organization if you introduce ESOPs in your ESOPs in the company. So how? Because when ESOPs are being given as for the reward, for the past performance, and also the ESOPs value will be linked with the performance of the company and their individual performance. So within the organization, ESOPs help in creating a performance driven culture among the employees. Also, because it's a performance driven culture is there, motivation is there, so definitely the employees performance level also increases because they are directly being remunerated with the increase in the wealth of a company. Then also nowadays, if you have an ESOPs in the organization, you will be able to attract the improved talent. Reason, in every industry now, and in every industry and in every all over, whether if I talk about the region, if I talk about the industry, everywhere now ESOPs are there. So if your other organizations are giving ESOP, you are not giving, then definitely you are losing the talent. So by introducing the ESOPs in the organization, you'll be able to attract more new talents, and also within the organization you'll be able to retain your talent. Then sense of ownership and accountability increases, because if nothing is achieved by the organization, employees also not achieving and gaining by getting the ESOP, so their accountability and ownership also increase in that. The strategic goals can be achieved by the company, because if what the company itself can't achieve the goals, so they have to align their employees' objective as well. So if the company wants to achieve the strategic goal, like in the company nowadays, companies have the strategic goal to get at the startup level, they have a goal to attract the VC, that the VC will come, they fund the company. Once they receive the funding, then they have a next goal to get the company listed, because nowadays you have seen that many of the startups, the so-called unicorns, are now getting listed. Even the companies at an MSME level, SME level, they are also getting listed. So the next goal is that. So these are the strategic goals. So when it comes to the strategic goals, it can also be achieved because the company also get its value unlocked, and as well as the employee also gets the benefit of that unlocking of the value of the company. So achievement of the strategic goal also become very easy, or it's achievable. It seems achievable when you are introducing ESOPs in the organization. And definitely it's a long-term financial benefit for an employee, because what through the ESOP the company is doing, the company is reinvesting the amount from the employee, and as well as the time of an employee again. So, and by investing that time and the amount, both, the employee also be getting it, but through their own effort, they will be increasing that value. So it's become a long-term financial benefit for the employees as well. So if you miss this particular time, so it's not that you can't come out with an ESOP anytime during the year, but yes, this is the right time. So if you miss, then what will happen? Because definitely in between, you are not setting up the goals for a company. and generally the plans do not change in between in the organization. So employee motivation will be, okay, I be receiving only this much of part of the remuneration. This is my variable pay, which is generally be this much of salary, this much of salary. But ultimately, if the company is growing at a X level and I be getting only a minus X of that, then the employee's motivation might be low. Then retention, definitely, because nowadays in every the maximum organizations are giving ESOP. So if any employee wants to relate what he be getting and what the other friend of his or other organizations are offering, salary plus ESOP, so definitely the employee will opt for the companies where the ESOPs are being given. In our later slides, in the later presentation, we also show you that through the survey of ours, through the polling of ours, we have this being strengthened that yes, the people are considering that if the company is giving an ESOP, they are more likely to join that organization. Then ineffective because top talent, again, they are not aligning their interests, they are only limited to their particular benefits. Then there might be that the top talent you not be able to retain. Organization culture, definitely not be a performance driven, because every performance have a limit that they must be paid up to this level. So then it might be difficult to create a performance driven organization culture. And competitive advantage, definitely you are losing the competitive advantage if your competitor is giving ESOPs, so you will be missing that. So this is about that, why it's the right time that you are at a point when you can think of giving an ESOPs as a part of your new financial year thing to your employees. Yeah, over to you, sir.
Thank you, Mohini, for covering and giving in detail. Now it's a turn of Ankur. Ankur, now Anshuma, Mohini, and Sanchit has given the view of these aspects and why this is important today, because we have to do the appraisal. Now we want to understand, because first of all, when you were not there, I was introducing you that now companies are giving very interesting designation to HR people, and that is directly relating to the ESOP, talent, reward and talent. So you are not managing the HR, you are managing talent, you are managing and giving reward also. So your role is searching talent and rewarding talent, and then the third is retaining the talent. And fourth and fifth thing which is there, that because management expect that whatever you are doing, you have to maintain these people continuously and motivate them, engage them, make a part of the organization, feel as a owner. All these things are there. That is your responsibility. So now we want to understand, is this ESOP has really paid something? Your experience of 10, 12 years in this industry, and you are very young, but today ESOP mean young. All young people are getting ESOP, old people are getting salary. So the thing is that old people are getting peanuts and you are getting ESOP in bulk. So now your views, your experience, your views. There is no need that you have to explain your company thing. You have to give a general point of view and advice to the industry also. Yes, this is useful. Over to you, Ankur.
Sure. Thanks, Mr. Vijay. And first of all, good afternoon to all the sort of participants who have joined this webinar. And I guess Anshuma, Sanchit, and Mohini, they already spoke and covered a lot of technical part of the ESOPs, like how the evaluation is done and how various features work in an ESOP plan. Probably what I will talk about is more from a practitioner point of view, that more of an HR perspective, and also, right, as Mr. Vijay rightly pointed out, that nowadays it is also the expectation both from the employees and also the management that, okay, as an HR, how do we make the ESOP plans more sort of both employee friendly, also more sort of aligned to the business objectives, etc., etc. So probably I'll try to talk about those perspectives. I don't have any presentation as such, but I will just try to sort of cover some of the points which I wanted to sort of share from my side. So first off, the point, and which is I think the starting point on any ESOP plan, is to understand like what is your objective? Like why do you want to give ESOPs as a company? And traditionally, if you look at the way ESOP started, and ESOP as a practice mainly started from US and then slowly it sort of got into other geographies, and soon Indian companies also started following ESOPs. The main objective in the beginning was how do you align the sort of long-term objectives of the senior management or of the employees with shareholder value creation. Like how do you link both the objectives where shareholders are also making money through sort of appreciation in the price of the share, and accordingly, senior management is also gaining wealth. So that's how typically the concept of ESOP started, or RSUs, or whatever we call it. But slowly, what we have seen, and this has actually happened more in last 1 decade, where ESOP's plan have become more comprehensive. Now companies are more open to give ESOPs even at the entry level. Now we are seeing practices where companies offer ESOPs even to campus hires as part of the campus program, which was definitely not a practice, say, what used to be 15, 20 years back. And that's more because now slowly companies have started realizing that they can sort of achieve multiple objectives through ESOP plans or through these kind of equity linked plans. One is obviously like how do you align it to shareholder value creation. Second is how do you create instruments for exponential wealth creation for employees, right? Because when you give cash compensation to anyone, it's just a sort of value of cash what you're giving to the person. But how do you create avenues for exponential wealth creation for the person? Second, of course, is how do I sort of reduce my sort of wage costs? How do I sort of save on my cash flow, direct cash flow in the year, etc., etc. And that's how companies started adopting ESOP plan. From an employee perspective, also what has happened in last few years specifically is that people have also become more open to ESOPs. And to be honest, if I talk from my own experience, say like 10 years back when we used to offer say ESOPs to any new hire, there used to be multiple questions. Like people used to start questions starting like what is ESOP and then how will it work, how will I do the vesting, etc., etc. People were not so aware of these things. Now, what we are observing that employees, candidates are also much more financially literate, both in terms of how ESOPs work and how the vesting is done, what is exercise process, what is perquisite tax. So people are becoming more open in terms of these kind of instruments as well. And that's where I think now we are seeing a good alignment between the two things. Like, okay, as a management, we want more people to have equity ownership, long-term sort of skin in the game. And from an employee perspective, they are more open to these instruments. They want avenues for exponential wealth creation. They want avenues through which they can earn in multiples of their CTC. And that's how we are seeing that now. Suddenly, there is more and more sort of prevalence of ESOPs, both in terms of companies and the employees. So that is part one. And that's where we see that, okay, suddenly ESOPs have become more sort of prevalent instrument. Second, I think what has also helped, specifically in case of India, is that because of some of the recent events where you get those kind of media news articles like Flipkart bought these much value of ESOPs, or their kind of liquidation events were done, etc., etc. So those kind of sort of news media articles or sort of publicity also sort of helps in creating more literacy around these. So people suddenly know that, oh, there's a way through which I can make so much of money, or oh, through this instrument, my ex colleague earned so much money in that organization. So that's how it is becoming more relevant now, and more sort of useful. But as a consequence to that, while companies have started offering ESOPs more frequently, their plans have become more broad based. Now they are sort of different kind of challenges which we as professionals are experiencing as HR professionals. So one of the challenge which we now face, and which is something on which we are doing a lot of work nowadays, is like, if I am giving an ESOP to my employees, or if I am running an ESOP plan, how do I then create transparency around that in the organization? Because see, what used to happen earlier, because ESOPs were granted selectively to a select set of individuals in pockets to senior leadership. So there were those criteria, and board used to allocate and things like that used to work. But now, if you're doing a broad-based ESOP plan, where a lot of people are getting covered, and how do you create transparency? What are your allocation criteria? How do you select like who will get, who will not get, what will be the value, whether it will be 1x of the CTC, whether it will be 2x of the CTC. So I think now focus is more around making these ESOP plans more robust, creating more transparency, both in terms of the allocation, communication, etc. Second is that now, how do you sort of, and this is more of an administrative thing, and that's where companies like corporate professionals are helping us, that how do you administer these kind of ESOP plans, because now we have thousands of people holding grant letters, etc. So how do you open the exercise window for them, etc., etc. So that's more around administration, running that part. And the last piece is giving a total rewards perspective to an employee. And this is a point which is also more linked to the point what Muhi was covering, where now we are also seeing a trend where companies are less sort of linking the ESOP grants to the annual appraisal process, or the say the annual salary increments, etc. Uh, so it is now quite prevalent, and I have seen companies where, as part of your annual sort of salary appraisal or compensation revision, they say that okay, X amount we are giving a revision in your salary, and the Y amount we are giving you as ESOPs, right? And that's where it is important to give the total reward perspective to the employee, make them understand that okay, if you stay with the organization, this is the money which you will earn through fixed pay. This is the money which you will earn through ESOPs. This is will be your total, sort of total wealth realized in next 3 4 years if you stay with us. So giving them perspective, and that's a very different perspective to an employee. And once you show them that story, that okay, if you just work in another organization where you're just on fixed compensation, you will just earn say 100 rupees. But here, if you work with us, if you are part of our ESOP plan, there's a potential to make 500 rupees in next 3 years, and which completely changes the sort of the entire narrative of how you sort of sell the organization to the candidate, prospective candidate, how you sort of retain the employees, how do you sort of make your employer value proposition more attractive for them, right? So I think these are the 2 3 challenges what I see now going forward, because now I think people have solved the basic things around how technicalities of ESOP work. People understand that, companies also understand that part. Now, I think the next challenge where companies will face issues, or where, to be honest, where we sort of are putting a lot of efforts is, how do we create more transparency? How do we make it more sort of easy to understand for people, communication, and how do we sort of communicate the total reward sort of view to the employee, rather than just the cash in a silo and ESOP in a silo. So I think these are some of the challenges what we are facing, or the trends what we are observing in the market. Uh, yeah, so I think that's what I can share from my side. Uh, Happy to sort of answer any specific question or any other points which you want me to touch on.
Okay, thank you, Ankur, very much. Thank you. Your just I want to ask one very important point. Do you think when you are planning to give ESOP to your employee, what is the basic focus? I have mentioned 4 or 5 things: retention, then motivation, cost reduction. Okay, and various other aspects of branding and other thing. So, what is your thinking that which is the most important aspect which you want to see when you are giving ESOP?
I think that's a very good question. And according to me, I think at least for us, the most important criteria or the objective which we have tried to achieve through ESOPs is motivation and retention. That's the most important part. Because to be honest, from cost reduction part at end of the day, like ESOP cost will be allocated to the P&L. It's more about distribution of the cost, etc., etc. It's not mostly about wage cost reduction or anything like that. It's more about retention, motivation, and also in a way, how do you sort of ring fence your critical talent uh, from moving out and getting posts from the outside market, right? So I think these are the most important objectives what sort of we want to achieve through our ESOP plans.
Okay. Okay. So in your organization, which type of instrument is you are making, is a pure ESOP or some other thing?
No, so we have ESOPs. Uh, uh, and in ESOPs, we have two categories, two types of ESOPs. One is where we have time-based vesting. So those are pure ESOPs, which are time-based vesting, which have time-based vesting. Second plan we have is, again, those are ESOPs, but there we have performance-based vesting. And that is again one of the trend which we are observing, that a lot of companies are slowly linking their ESOP plans to performance criteria, especially for the senior and top management. Uh, and there can be multiple ESOP performance criteria. Some people sort of link it to top line, bottom line kind of criteria. Some people link it to share price, etc. Like say in our case, we have directly linked it to share price because now we are a publicly listed organization as well. So it is easy for us to do. It is also easy to sort of make it understand to the shareholders in that from that perspective. So like that. Plus, we have a small cash settled SAR program as well, but that is more for our employees who are based out of India or foreign nations, because for them again there are multiple challenges which we face from a legal perspective if we give them ESOPs in India. So for them, that's why we prefer cash settled. But mostly we have ESOP as an instrument which we use.
Okay, when you were not listed, then how you were convincing your employee that take the ESOP, it will be good, because when you was giving to them, then you were not listed. Funding was also problem initially. So how you what was the things, because so many corporates they are asking which are not listed, how to convince? Over to you.
Yeah, again, I think a very good question specifically for unlisted companies. Uh, and uh, and I will talk both from our journey perspective and what I hear from my colleagues in other organizations. So in case of delivery, okay, like what helped us was because we were sort of a funded company from very beginning, and we had multiple rounds like Series A, Series B, Series. So whenever you had that kind of rounds, there was sort of a valuation which was being put out and which was sort of available to people to see that okay, this is the valuation of the company. So people used to understand that yes, this is the value of the company, and hence this is the value of my ESOPs. Second is what we also did was we also did some bit of buybacks. Like whenever there was sort of a not exactly buyback, but whenever there used to be those rounds, there was always a small window for employees if they want to sort of sell something or want to participate in those rounds. Uh, and this is something which I am also sort of hearing from my peers in the other unlisted organizations is that now people have also started this practice that you also give opportunity uh, to employees to sort of either through a buyback or make them participate through those kind of funding rounds you are having rather than just waiting for the sort of a long term that okay, once we get listed then only you will be able to monetize your ESOPs, etc., because that becomes a very long term sort of an view. And when you do those frequent buybacks or those kind of things, employees also see the value. This like some because once the cash hits the bank account, right? then only you realize the true value, right? So it is
Okay.
very important to have those kind of buyback rounds, etc., at a frequent interval, so that people see the value of ESOPs. Otherwise, to be honest, they tend to sort of miss out. While on paper, you might tell them that we are having so much valuation, your ESOPs have become 2x, 3x. But unless they see cash coming in, they don't realize that value.
Okay. Mohini, till the Ritu is joining, you have done survey and other thing. Just share that part.
Yeah, sure, sir. So before I go into the survey part, so I just take a few minutes only to tell about ESOP taxation and accounting part. So that before we jump into the other industry analysis and the industry aspects. So already Sanchit has given you a brief about that what exactly in the ESOPs valuations are being done, and at 2 stages the ESOPs valuations are being done. So I just take both things into separate things. So first is the ESOP taxation. So ESOP is taxable in the hands of an employee, and ESOP is not taxable in the hands of a company. So it's taxable in the hands of an employee, and it's a cost to the company, but yes, it's tax deductible. And now, as per the income tax, being though a notional expense, it's being allowed as a tax deductible. And there are various high court cases as well, which justifies that yes, it's a employee's expense as well. So now, when it comes to the employee, so there is a 2 point of taxation in any equity linked incentive if you are giving. So first is at the time of the exercise of option, and second one as the same. So if you remember, in the presentation, Anshuma has covered the life cycle of an ESOP. So there is a grant, there is a vesting, there is an exercise, and there is a sale. So when it comes to the grant, no tax in the hands of employee, vesting no tax, and there is no, so the first point of tax will come when it comes to the exercise. So exercise is the first point of taxation. What the exactly the tax amount will be? So tax amount will be the difference between the market value at that time minus the exercise price. So that will be the gain which the employee be getting at the time of exercise, because it being given by an employer. So it is a perquisite and will be added in the salary, and whatever the tax bracket the employee individually falls, they have to pay the taxes over it. So that is the first point of taxation. And the second point of taxation comes now he is the owner of those shares. When he's selling those shares, he has to pay a tax over it, and at that time it will be treated as a capital gain tax depending upon the period of holding of those shares are. Now, because it's a taxable in the hands of an employee, it's an income for an employee. So someone, it's be a cost. So it's a cost to a company. So the company has to, so when we are deciding on the cost, 2 aspects of any cost is, so first is the amount, and the second one is the period of recording. When it comes to the cost, so cost will be determined at the time of a grant, wherein the value of the cost, or the cost is at the time of grant, whatever the market value of the company is, minus the exercise price he is offering to an employee. So that benefit is the cost to a company. Now, if the company is pursuing or following the Ind AS process, then as per the Ind AS, the company, in addition to this, have to get a calculation of the fair value. Fair value methodologies, as Sanchit has described, there are Black-Scholes, which is a very much prevalent methodology through which the fair value of option is being there. So that amount is the cost which is to be booked in the books, and the period is the over the vesting period. So that vesting period, the cost which we have determined at the time of grant, from the grant till vesting, this cost need to be booked in the books. So this is the accounting part. So now so we have covered the basic concepts. We have covered the why it's the right time that you should the company should try to come out with an ESOP process in the company. And also we have learned the industry perspective from the Ankur, that how the organizations are nowadays creating the ESOPs, what the challenge they face. Now we have also, because we are into this practice area since long, so we have compiled the data from various industry sectors. And from those industry sector study, we have studied the sectors like housing, finance, auto ancillaries, healthcare, consumer goods, fashion, and logistics. So in all these industries, ESOPs are there. What we have find out from this industry analysis, that generally the companies are adopting the direct route as compared to the trust route in the when they are implementing their ESOPs. But when we come to the healthcare sector, so there we have found that the trust route is predominantly be adopted. The appraisal, the second point, which is our study point, is the appraisal and the eligibility criteria. They are generally all the companies have given the ESOPs, and when they are trying to that who from the entire workforce, who all employees will be given the remuneration in the form of an ESOP. So they are checking on the basis of their length of service. Yes, nowadays new joinees are being given, but their length of service they are considering. Then their criticality of role and designation. Then employees past and future performances, performance of a company, and the level at which they are the employee will be. So these are the eligibility appraisal process criteria. ESOP pool, we have seen that it ranges from 1 to 4% across the industries. There is a 1, 1.2, 2 or 3, but on an average, it ranges from 1 to 4%. Frequency of grant, we have seen that once to at least the companies are giving once they have adopted it. And as and when the employee is joining, so they have a various methodologies that on a quarterly basis, they are giving the ESOPs in case if they are offering it to the new joinees. But once or then we have find that twice they have given the ESOPs. Then excise price, if I talk about, so we have find that the pricing formula nowadays is linked with the market price. And generally, no discounts are now being offered. But in the finance sector, we have not found any discount. But yes, we have found that suitable discount has been offered in the other sectors, and that discount ranges from 10 to 60% in that six. So these are the discount factors which we have found in the excise price. Then it comes to the vesting schedule. So we have found that it ranges from 1 to 4 years, basically, not beyond that. So longer vesting periods are we have not found in the companies now. And the vesting conditions, continued employment is one of the criteria. Time-based is again linked with the continued employment only. The performance now the companies are giving with revenue and EBITDA they are considering, and the performance of the employees also. And like in the listed company, the value of the company can also be linked with the vesting conditions. So in the excise period, if I talk about, averagely it ranges from 1 to 3 years. So here also the employees will not be receiving a good, a longer period for the exercise of their options. After the exercise, there is no lock-in on the shares to shares for selling in the market. So the employees are free to sell once they receive the shares in their account. And then when it comes to that options granted at a senior managerial level, generally SMPs, which we say. So in the SMPs, yes, the companies have distributed at a very good large number of ESOPs at this level. So this is about the industry analysis across the sectors. So over to Anshuma. So we have done the polling as well through the LinkedIn. And Anshuma, you just, if you can take us through the polling analysis of us.
Sure. So the first polling or the polling which we have analysis is done which is relating to somewhere with our topic only. So first analysis, if I talk about, we have found that what is the importance of ESOP for an employee while deciding to join or to stay with the company. How much like it is important for an employee's perspective. So as per the polling result, we have found that almost 48% to 36% employee or the people consider that the ESOPs is a crucial component while deciding whether they want to stay in the company or they want to join a new company. Moving forward, the second polling is, thus accepting of ESOPs makes the employee feel a part of the company. So yes, again, almost 38% to 36 percent polls have received, considering that the acceptance of ESOPs, however, depends on the offer which is being given. So when the employee is connected to the company, it depends on the offer what they're actually receiving. And yes, it is how somewhere very important for them. Next is whether grant of ESOP is usually aligned with the annual performance evaluation cycle. So, which is our topic for the today. So, almost 69% poll consider that yes, ESOP grants are usually aligned with the annual appraisal cycles. Next poll says that whether the ESOP is considered as a part of hiring strategy. Almost 100% vote was received in the favor, considering that ESOP is considered to be one of the hiring strategy of the companies. Next. Whether an employee is likely to continue with a company that provides an ESOP, that one doesn't. So Moini ma'am has already said on this point. And even we have received more than 60% considers that yes, employees are likely to stay with the company that offers ESOPs as a part of their compensation. Whether ESOP fosters ownership and long-term commitment among the employees. So almost 90% of the poll considers that ESOPs provide employee a sensation of long-term commitment and ownership based on the experiences. I think. Next. I think that's it.
Okay. Okay. Thank you. Thank you very much. Moini, now we have received various questions also. So what I'm doing, I'm taking all these questions. When Ritu will come, we will take her views on this. So now first, Anshuma, whether the employee working on a probation basis or a contractual basis or part-time shall be eligible for ESOP?
So if I talk about in context of unlisted companies and listed companies, in unlisted companies, generally the law allows only the employees who are permanent employees of the company. So therein, if you are in contractual or probation basis, until unless you have not become a permanent employee of the company, you are not eligible for ESOPs. But however, in case of listed companies, the SEBI regulation allows even the contractual base of employment also for, or even the employees who are on the probation basis.
Okay. Can ESOP be granted to dealers, vendors, supplier, consultant?
As I've discussed earlier, under the coverage of employees, the vendors, dealers, and suppliers, since they are not the employees of the companies, so they are not considered or eligible for ESOPs under the company.
Only what is the meaning of permanent employee as per the Companies Act? And all these things are changing now. Gig worker, and various other aspects, consultant, hospitals. So what is your view?
So with respect to the equity linked incentives from the company, so it can be given only to the employees, and in the unlisted space, it's only the permanent employee. So permanent employee means that where it's not a contract that the employee will be in the company for 1 year or 2 years, such a kind of a thing. So ESOPs, that means equity linked instruments, can be given only to the permanent employee. But when it comes to the other type of categories of the workforce, like the gig workers, the doctors who are now on panel, on consultants. So for those, the different type of cash-based incentive plans, which is linked with the value of the company, by name, which is basically the phantom stocks, they are coming into, like an academy and all, if we look into. So they have offered it to their teachers, though those are not the permanent employee of the company, but definitely they have given through the
Only I think one program you must organize on the basis of non-permanent, other than permanent employees, what types of ESOP benefits you can provide.
Surely, sir. So soon we will also organize a program on the other non-permanent employees. So
Are these
we are giving
provisions
the cash benefits in those cases.
okay? Are these provision for adjusting or withholding grant based on performance concern, Mohini?
Yes, performance definitely matters, as I think we have listened from the industry also in our earlier webinars, also in this webinar, that when we are giving, when any company is giving the grants to any employee, so definitely they are considering the performance done by the employee, and also a part of the grant testing is linked with the performance. there are companies which are giving 50-50 linkage. That means 50% time, 50% in terms of performance. And many of the companies nowadays also opting for the 100% performance, because they don't want that the employee will be getting it as a completely that he not perform and then he will be getting a part in the wealth of a company.
Okay. Moini, how will the organization handle ESOP grant in the event of employee leaving the company, especially if their departure is due to performance-related issue?
So there is a law which governs this particular aspect. So law says that if the employee has earned that vesting, then we can't take that vesting back until and unless the employee is terminated for misconduct. So if that be the reason, vesting also get lapsed from the hands of an employer, but otherwise what is vested, we have to get, and what is unvested, definitely the employee has to lose that part.
Okay. Anshuma, how can the company ensure that the employee understands the value and benefit of the ESOP grant? And how you are handling this?
Okay. I think generally communication of value is important. So in that space, to make the employee understand, the companies needs to do valuations on regular basis or yearly basis, and they need to communicate those values so that the employee will be able to understand the worth of ESOPs they are actually holding.
Anshuma, can foreign national be given ESOP?
Yes, as I've very well covered before, that an employee, the Indian companies and vice versa, they can issue ESOPs to the employees who are outside India and also in India. However, requisite RBI filings are required to be done, and there's a process which needs to be complied because such investment in India is considered as a foreign FDI. So, as per the RBI guidelines, needs to be complied with.
Okay. Upon what level the management ESOP should be distributed to employee?
If we, as per the analysis which we have done, the major level or up to the level which I can tell you is up to the CXOs, and 2 level below the CXOs, we have seen that the ESOPs has been distributed at the senior management level. But if we talk about the startup companies, generally whole of the organizations are being covered by the companies.
Okay. Role of are these specific key performance indicator that directly impact the value of ESOP grant, Moini?
So key performance KPIs definitely be linked with the vesting of an employee, the vesting of an options of an employee. As in the last also question answer we have covered that the organization performance and individual performance. So if I talk about the top level CXOs level, so directly the company's performance are linked with their vestings and included in their KPIs. And when it comes to the next levels, then part of the percentage is linked with their individual performances and part is linked with the organization performances.
Okay, will the ESOP grant be tied to specific performance metrics or milestone?
Yes, definitely. Like the strategic, if the company have some strategic goals, they can definitely link the vesting with that particular goal. Yes.
Okay, can a company give ESOP to employee every month as a part of salary?
No, it's not the practice which we have seen.
No, that
Yes,
is okay. I'm asking the law. If suppose I want to give every month.
So yeah, nobody's stopping you, but practically it's not being done. Yes, vesting is nowadays the companies are going for a monthly vesting. So monthly, like salary is getting credited, monthly the vesting is also getting credited in
So
your.
is it not the same thing which I'm asking question?
So grant means fresh grants being given. So it's instead grant will be given. So like this is a salary or your salary, and every month you are getting a credit of it. If you work in the company, you will be getting it. So grant is once, vesting is monthly.
Okay. Can the company give ESOP assuming 100% of performance and then adjust in accordingly after evaluating the performance? Explain performance-based vesting, how it can be done.
Yes. So if the vesting is linked with the performance, so after if it's a yearly performance link, so after the end of the year, the company appraises that performance, and if what the performance parameters met, 100% vestings will be done, except in those cases where the individuals are not performing at all. But yes, every year the performances are being evaluated and accordingly the vesting numbers will be given.
Okay, Anshuma, if a company has implemented ESOP scheme through the trust route, can they later switch to the direct route?
Definitely, I think the SBB regulations allow the change of route from the direct to the trust route or trust route to the direct, vice versa. But if you're changing from the trust route to direct, just ensure that there is no prior allocation of shares being done to the trust so that the implementation gets easy. If that is the case, then certain requirements of SBB regulations needs to be complied before that.
Okay. At what price the ESOP trust can subscribe to a primary shares of the company?
Generally, because ESOP, it should be the exercise price at which the trust should purchase the fresh equity shares from the company.
Okay. If the ESOP are issued to the foreign employee, whether any prior approval RBI required, Moini?
ESOPs to a foreign employee is a part of an FDI. So up till automatic route, no approval. But if it's a prior approval if it's an approval route, so prior approval you need to, and then you can give the ESOPs.
At what stage in principle approval is required for ESOP, Anshuma?
So if in principle approval, we talk about the listed companies. So once the scheme is being implemented and approved by the shareholders and implemented in the company, and the scheme is of the fresh issuance, where the fresh equity is to be issued by the company, then at that particular point of time you require, before granting, you need to go to the stock exchange and take requisite approvals for that ESOP pool.
Okay, Moini, certain aspects of valuation. For a listed company, how many times ESOP valuation is required?
So at the time of grant and at the time of exercise, it's a compulsory. But because you are giving an ESOP, so ultimately you have to show a growth to an employee that yes, their value is increasing. So we recommend that the company should have at least the valuation exercise once in a year after finalization of their annual account. So,
Okay, if the company grants monthly, how many times does the company need to get valuation done?
if you are doing it monthly, in the unlisted companies, a valuation is valid for a period of 6 months. So you can do every month if you are granted. So one valuation can be used for 6 months. But if you are a listed company, for the accounting purpose, every grant is a new grant. So for every date, you need to obtain a fresh fair valuation from the valuer. So you are mute.
Sorry. How does ESOP valuation differ in case of listed and unlisted company?
In the listed company first. So in the listed company, the market value is the value which we obtain. Okay, it's the company's value because it's being traded at that value. In the unlisted, there is no valuation available in the market at which the shares are being exchanged. So in those cases, either the value at which the last any transaction has happened, which is in the last previous 6 months. Otherwise, the company's other valuation methodology, like we discussed, like discounted cash flow, peer group, company comparable method. On those basis, the valuation will be done and the value of the share need to be obtained. And then on that basis, the ESOPs grants will be given.
Okay. Startup and unlisted company, there's some issue. Can ESOP issue to promoter in case of startup?
Yes, now the exemptions have been given, introduced in the Companies Act, that the promoters of a startup for a period of 10 years from the registration, they can be given the ESOPs.
Okay. What are the liquidity event in case of unlisted company for employee under the scheme?
So liquidity event, generally generally we have seen is any equity VCs are coming or any HNIs are investing and or any kind of the sale of the company is being there. Or the last one is if the company's the company is getting listed, at that time the employees are getting the exits.
Okay, Moini, one issue is tax. How the ESOP tax in the hands of employee, Anshuma?
I should answer this?
How are ESOP taxed in the hands of employee?
Okay, so as Moini ma'am has discussed previously, ESOP taxation is basically 2 points. Once at the when the employee is actually exercising it, that is it, he's converting his options into the shares. At that particular point of time, the taxation will come. That is, and it will be the difference of the market price as on the date of the excise and the excise price which he has to pay. That will be taxed as a perquisite in his salary, and that perquisite will be added in the month in which he is exercising, and then as per the income tax he has to pay the requisite tax. And the second point of taxation is when he receives the post allotment, when he's receiving the actual shares and then he's selling the shares in the market. At that point of time, the capital gain, because shares are capital assets and therefore it is taxable as per the period of holding, whether it's a long term capital gain or short term capital gain, and it shall be taxed as per the Income Tax Act.
Okay. Moni, this is the last question relating to which we have received in advance. Whether any taxation is imposed on company for issuance of ESOP?
No, no tax is issued. It's tax deductible. It's
Okay. Now I'm coming to the top questions which public has asked. Can ESOP sweat equity be issued to advisor consultant?
No, for the sweat equity also, the eligibility is for the promoter, for the director, for the employees, but not the advisors.
And what about the ESOP?
ESOPs are only for the employees, not for the advisors.
Okay, but for consultant, which you have mentioned, that some other scheme can be there.
Yes, some other scheme can be designed.
So can you just repeat again, what are the schemes for the consultant and advisors?
So we can create a cash-based plans, which is linked with the value of a company, wherein the appreciation in the value of the company can be distributed with those advisors, can be shared with those advisors.
Okay. What could be the form of incentive employee in case of LLP, as these cannot issue ESOP, etc.?
So there is a challenge that in the LLP, the equity linked benefits definitely we can't issue. When it comes to the cash sharing, so in that case also we can't share the profit per se. So in the LLP structure, we have not seen that the companies have, or the LLP structures have formulated any kind of ESOPs or cash-based plans incentives.
Okay. Okay. But any other mode?
Sir, through the profit we can't link, profit sharing we can't do, but the other any kind of other determinant factor in the form of a salary we can determine, but through the value sharing it will be a difficult task. Generally, the companies who want to give the ESOPs first convert their structures from LLP to the private limited company structure, and then they are offering it.
Okay. Is trust established for implementation of ESOP scheme considered as designated person under SBI, SEBI PIT regulation?
No, it's not a designated person. The law says that the trust has to comply with all the regulations of the PIT as the promoters need to. But by this law, this provision, trust will not be treated as a designated person.
Okay. How valuation will be done if exercise price is open-ended, as employee can exercise anytime ESOP? Then how valuation will be done?
In those cases, we have to just think it of that what is the longevity or average longevity of an employee in the organization. So on that basis, we determine the exercise period, and considering that the valuation of a company of the options will be done.
Okay. For listed company, ESOP valuation, market price on both stock exchange need to be taken, or the stock exchange on which higher trade volume? Please clarify.
When calculating the perquisite value, higher the exchange at which the trading is more, is high, that will be considered for calculating the fair market value.
Okay. Which date will be taken for consideration while ascertaining fair market value, and which regulation govern the calculation of fair market value?
Income tax, because it's a perquisite, income tax govern it, and the date is the exercise date.
Okay, what are the pros and cons for issuing ESOP or RSU through trust route and its tax implication?
So both can be issued through a trust route. So pros and cons depends on the objective of the company, what the objective of the company is, but both can be issued through the this trust route. And when it comes to the taxation part, so ESOPs are generally market linked. So the benefit, the gain seems to be less. It will be they will come out will be a less in those cases. But RSUs are deep discount options. So generally they are being issued at a face value. So there the value, the gain will be more. So the perquisite value.
Okay. What is the ESOP pool?
ESOP pool is the part of a capital which we
So,
are
let me just complete it.
Yeah.
What is the ESOP pool? Share are allotted only after exercise or option by employee. So when you say shares are moved into pool, does it mean only resolution passed by the board decided the number of shares to be issued under ESOP in the future?
Yes, this is the right understanding. When we talk about an ESOP pool, so what we are doing, we are segregating a part of a capital from the authorized capital or subscribed, from the issued capital for the employees, but it will be converted and become an actual equity only and only when an employee exercises.
Okay. Can you please cover in brief ESOP for foreign company to Indian employees income tax angle?
Foreign companies, Indian employees. So in
Mhm.
those cases, yes, there is no bar at all that Indian are not being covered under the ESOPs of foreign companies. We have seen that in MNCs from US, from UK, from Singapore, they are offering the ESOPs to the Indian employees. When it comes to the taxation in the hands of an Indian employee, so in India, the Indians are need to be given the tax on the global income. So it's a service which we are rendering here only, and my entire vesting period, entire my service period is in India. So what I get from my employer, either it's from India or from the foreign country, is to be taxed in India itself. And also we need to check the DTA as well in those cases.
Okay. How is market value calculated on an exercise for listed company? Is the closing price of the exchange, which has higher trade, or the average of the closing and opening price on the exchange?
The second one, the average of the opening and closing, that is to be there. But in case if it's a non-trading day, then the previous trading day closing will be taken.
Okay. Please share input on the ESOP practice in IT sector too, if any.
IT sector, it's very much prevalent in the IT sector, and I think hardly now the companies have left in the IT sector where they have not the ESOP. So they at a very even at up to 3 or 4 levels, the IT sectors are giving the ESOPs, and now the established IT sector companies are also offering the RSUs, and nowadays they are also moving to the SaaS. So this is how the ESOP they have reached to a third or fourth generation of ESOPs, we can say.
Okay. Why the income company eligible for booking expense different between the exercise price and market price when the company is not getting gain?
So company is getting, it's not getting a gain actually. The company is passing on a benefit between the exercise price and the company's value. They are getting the gain from the service which they are getting from an employee. So it's a kind for the service of an employee, you are paying out that benefit to him. So this is the why the books being this is considered a cost and is to be booked in the books.
Okay. Is the difference between exercise price and grant price treated as capital gain or other income in the hands of employee?
So no, so it's not another income at all. So because you are getting it from the employer, it's a part of a perquisite, and when you are selling it, it's a part of a capital gain, not another income.
Okay. Anshuma, whatever you want to add, you can add also.
Yeah, sir, I'll do it.
How valuation will be done if exercise price is open-ended as employee can exercise one anytime ESOP? Then how valuation? I think this question you have given us.
We have given the answer.
Okay. Which section of the Companies Act income tax states that requirement of the valuation of ESOP?
So when it comes to the valuation, so it's not coming from the Companies Act. Companies Act says that if you are giving an ESOP, you have to follow the relevant accounting standards. Accounting standard talks about the booking of the cost.
Okay. Can you share PPT? Yes, we will share the PPT. Shivam Singhal, please share the PPT. And anybody who is not received, please contact Shivam Singhal. His email address and number is there. Can listed company grant ESOP to CEO who is related to a promoter?
No, if he is a relative of a promoter, it's not related, it's a relative of a promoter, then he can't.
Okay. Is there any period defined in the law for expiry of the vesting period by the employee?
There is a requirement of a minimum vesting period. There is no requirement of a maximum vesting period. You can keep as long as you want.
Anshuma, you want to say anything in this?
I think this is very well right. However, companies may define, you're required to define the maximum period in the while the scheme, and you have to mention that in the explanatory statement. So once the maximum period is fixed and once approved by the shareholders, the vesting period will be defined as mentioned in that period.
Okay. Can you elaborate RBI approval reporting for ESOPs grant by Indian companies to foreign national employee?
Yeah, Anshuma.
Yeah, so if I talk about, for example, there are at general level I'm talking. So when the companies are granting the ESOPs to the employee and considering that it's falling under the automatic route where no prior approval is required by the RBI. So at the time of grant, you need to file the form ESOP within 30 days of the grant. And once that, and it's a regular process as in when the company is granting ESOPs to the employees. And the second comes when actual allotment is being done, then form FCGPR would go within 60 days from the date of allotment. So for the ESOP perspective, these are the two important filings which the companies have to do.
Okay. And Moini, recommended option for aerospace and defense sector, because this sector is no doubt is growing. So there are two things. Retentionship is not a problem because you can't find jobs in everywhere, but you have to incentivize these people to give best. So what do you suggest?
ESOPs, because we have seen that the companies like, if I talk about Idea Forge or so they have also the ESOPs in their organization. So in those, and in the aerospace, if I talk about the airlines companies, so in the aerospace also the Indigo have their plans, SpiceJet have their plans. So generally now even in the airline sector also the companies are giving the ESOPs.
Okay. Moini, there is an interesting question. Question, not suggestion. How corporate professionals help in establishing ESOP mechanism in a company listed with BSE and SC?
So we have a very good experience. We can help you from the day you have thought of that you want to give an ESOP. So we can help you in designing the entire policy of yours, setting up the terms based on the industry standards, the industry which you belongs to. And we can also help you in setting up the appraisal process of yours. And definitely once you adopt that policy, we can help you in the regular administration of that as well. So we are with you for entire 360
And
days.
ESOP guardian?
Yeah, ESOP Guardian is that once you implement it, we will be there for administering through our e-portal ESOP Guardian. And also we have an in-house valuation team. So you need not to go anywhere else when you connect with us.
And trust route?
Yeah, we are helping you in the creating that how to create the structure, trust structure, what the accounting policies you need to implement at that time. And definitely we also connect you with the trustees who can help you if you want an independent trustees and independent auditor.
Okay. What happened if the company got listed having ESOP? Is any requirement to take approval?
Anshuma.
I think for the approval process, once the shareholders approve the requisite schemes, and if the company which is listed, for example, if the listing is being done through pre-IPOs and then you are implementing, you already an ESOP scheme and then you have got listed. So after that, there's a requirement of ratifying the scheme as per the SBB regulations, wherein you have to align the schemes as per the regulation, and then only any fresh grants can be done. And if, for example, any prior grants have been made before the listing, then you need to get it approved from the requisite stock exchanges, and then only you can further allot the equity shares under those grants.
Okay. Private companies are exempted from obtaining a special resolution at the time of approval of the ESOP scheme. They can do it with ordinary resolution. So is the requirement also exempt the requirement to obtain a special resolution under rules as well as?
Yes, because the Companies Act 62 has specifically omitted that, and even there was a notification for the private companies where the special resolution was replaced with ordinary resolution. So whenever you're approving the ESOP schemes, you do not need to take any special resolution for them. It can be approved with the ordinary resolution as well.
Okay. So Moini, we received 25 questions here and 30 questions I have received earlier. Few more questions are there. Just give answer. Can the ESOP trust sales ESOP share in the market on behalf of employee?
Yes, the trust can sell the ESOP shares on behalf of an employee. Yes, it's allowed.
Okay. Can multiple scheme be managed by the ESOP trust?
Yes, one trust can manage multiple schemes.
Okay. Now, few questions on valuation. Is permissible for utilizing the acquisition price of an investment in a company as the basis for valuing shares during the time of ESOP grant?
Yes, definitely it plays a vital role, the last acquisition price by the investors. But if it's the transaction is 6 months earlier than the grant date, then you need to value it again.
Okay, what is the impact of discount on books of accounts of the company?
So if you are offering a discount, then that discount is a cost and hits your cost.
What process is followed if the company wants to increase the option of its ESOP pool?
If you want to increase the pool of your options, then you need to take first the board has to approve it, and then the shareholders has to approve it, and then your pool will get increased.
If it is required to define the optimal maximum exercise period in the ESOP plan?
Optimal period of exercise. So if I talk about that, if you have to decide what the exercise period in the organization will be, so maximum up to 5 years you can think, you can keep that exercise period of yours. And what the right time for an employee? So in the listed company, anytime the employee can exercise based upon the need of his or her need. And in the unlisted space, if we talk about, so generally the employees exercise near to their exit periods.
Okay. For a startup and unlisted company, what are the modes through which unlisted company are doing ESOP buyback currently in the market?
So whenever new investors are coming, or the promoters itself, or the founders itself, they are giving the options for the purchase of those shares. And if the company is getting HNIs, or third is that if the company has opted for a trust route, so through trust also mechanism, the companies are giving the exit to the employees.
Okay. Last question, whether any taxation is imposed on the company for issuance of ESOP?
No. Taxation on company, no.
Okay. Is it mandatory to do the valuation of the shares of private company before offering option to the employee?
Yes. You have to follow the accounting standards and you need to get it valued.
Okay. So thank you very much, Moini. I think we have covered more than 55 questions, 60 questions. So anybody can have doubt, they can go to our YouTube link and they can rewind it and see this. And in case some question which is not clear to you or answer is not clear, or you want to ask further, you can write to us. We will reply to you. So friends, we are completing what a great panel and what a great session, sir. Thank you very much, Abhishek, for kind words. So Moini and Anshuma and Ankit has covered all the points and Sanchit has given on the valuation. Ritu, she was supposed to join, but there was a meeting which has postponed, so that's why she was not able to come. Thank you, Vandana, for mentioning. Thank you very much for a wonderful session. So friends, we are closing this session here. Now it's a 6 o'clock. As per our protocol, we always try to maintain timeline and we want to give more time to the question answer. So we have done this. So as a ritual, last word, Anshuma, what do you say about the ESOP?
I think ESOP is the new compensation tool, and it's important to understand the company's perspective as well as the employee's perspective also. And as per the market practices, companies are getting involved in this. So I think once I think every company needs to plan it properly so that it is a successful implementation at their end, and even for the employees they receive a long-term appreciation, which is from the employee's perspective it is required, and I think it's important to plan your ESOPs well.
Okay, Mohini.
So ESOP, like Anshuma said, that ESOP has now, it's no more a new compensation tool. I think now after when we sit after 5 years or so, we say that it's also a part of a traditional compensation package now. Yes, but employees are the key resource and the key thing for any company, and for keeping the motivation level high for an employee. Better is that if you give them the sense of ownership and also share the wealth creation with them, it's good that you introduce the ESOPs in the
Okay, so thank you, Mohini, thank you, Anshuma, and thank you, Sanchit and Ankur in absence. So it was a very wonderful session, and Mohini and Anshuma, you have given all questions smoothly and flawlessly. So thanks for your wonderful knowledge you possess during your doing, I think, more than 500 companies ESOP planning you have done. So friends, it's a time to end this. And as you are aware that corporate professional has taken a pledge to share knowledge in the corporate world. So this journey of sharing knowledge will continue. This was our 162nd webinar. Now 163rd webinar will be next Friday. And till then, see you all. We'll meet you with a new topic, new speaker, and new questions for the corporate world. Thank you very much.
Thank you. Thank you, everyone.